They tell me you're part of the lawyer. Yeah.
You may not need a microphone, but it's I still have a going on.
Sure. Can everybody hear me okay? If I can, I prefer not to use a microphone. So everybody's good? All right. Good evening, ladies and gentlemen. Welcome to State Representative Reggie Phillips Town Hall on property taxes. My name is Jeremy Yost, your MC tonight. I'm a small business owner in Coles County. As a family man and fellow taxpayer, I'm excited to hear tonight's presentations and better understand property tax bills and what can be done about them. I believe that the state of Illinois is at a crossroads. We're either going to go forward or nothing else, and it's going to get worse. We've kicked the can down the road for too many years, and it's time to make a change. We need strong leaders in Springfield. And by strong leaders, that guy standing back there, our state representative, is somebody that sets an example of a strong leader. And I would like to thank Representative Phillips for hosting the event tonight. We've got Mark Decker here. He's going to go through and help us understand how property taxes are calculated, what our rights are as property owners, and explain everything in detail to us, along with Kelly Melcho, who is with the County Assessor's Office. So Mark's going to do a quick overview tonight about property taxes, and then we'll move on to Representative Reggie Phillips, and he'll give an update on Springfield. And both individuals will have Q&As, and if you guys don't get your questions answered right away, afterwards, be able to have some time for both of them to answer the questions as well. And so also at this time, I want to introduce Susan Petty. She's legislative aide for Representative Phillips' office. So if there's any other questions or concerns you guys have, she'll take all your information down and contact her. And most importantly, thank you all so much for attending the meeting tonight. And I'm going to turn the floor over to Mark.
Thank you very much. I'm going to use this because I have some kind of allergy going on, and I want to make sure you hear me. So my name is Mark. I work on behalf of Representative Phillips and the caucus, and we do these programs all over the state. They become very popular in the last 10 years. Some people ask, well, why is a state representative sponsoring a property tax seminar? Well, because the representative's office gets emails and calls all the time from taxpayers, illegal taxpayers, saying, why are my taxes so high? What's going on? And so as a public service, we decided about a decade ago, we'd start doing these programs all over the state. We found that every county, there's 102 counties in Illinois, and there are 102 slight variations on how things are done. But I'm going to go through this, and you are very lucky this evening. There's somebody from the assessor's office who's going to do predominantly the majority of the program. I'm just going to get everybody started. I don't mean to insult anybody's intelligence. I might say some things that you're like, well, that's obvious, but I just want to make sure everybody's on the same playing field when we talk about the assessment process. And hopefully we're going to demystify this process so you understand sort of how it works. If you do nothing else tonight, there's a brochure on your chairs that's got understanding the assessment process inside. The best numbers that you can find, your local county assessor's phone number is in there. She's not able to be with us tonight, but that's your number one source. You need to go to your local sources. And this is something you can share with your neighbors or friends at church or whatever. So yeah, let's go. So a quick thank you to Lisa Ritchie, who couldn't be here tonight, who provided feedback on information that we're going to be using. And then also Kelly Melcho, I'll introduce her in just 3 or 4 slides into it. Okay. So this is from the Illinois Department of Revenue's website. Everything we talk about is public information. It's public knowledge. You can find it. we hopefully have gathered all this stuff to put it into one location and you can save a lot of time. So the property tax is the largest single tax in Illinois and is a major source of revenue for local government and local districts. Illinois does not have a state property tax. The last year the state of Illinois imposed a real estate tax was in 1932. Since then, it won't be too long, I'll have to say 19 every year because 2032 is coming up. Okay, since then they are collected and spent at the local level. Owners of real property like a house, land, commercial, or industrial buildings pay property taxes directly. People who do not own real property most likely pay the tax indirectly, perhaps in the form of rent to a landlord. Like currently I'm renting, and so I know my rent went up last month because, well, the taxes on that land went up, and that's just the way it works. Anyone who attends public school, drives on roads, uses a local library or police or fire services or services from the county, receives services paid for, at least in part, by property taxes. Illinois has nearly 7,000 taxing districts, more than any state in the country. Okay. So Illinois property tax, ancient history, just want to make sure, but so from the time we became a state in 1818 to 1932, the state levied a centralized property tax. It was both on personal property and real estate. In 1933, property taxes were levied, collected, and spent at the local level starting then. 39, the Revenue Act of 39 is the basic foundation of what real property tax code is today. In 1970, the Illinois Constitution amended to eliminate tax on personal property by 1979. Recent history, starting in 72, the General Assembly enacts senior homestead exemption. You probably heard of that. 78, the General Assembly enacted general residential homestead exemption. In 91, the property tax extension limitation law was enacted, PTEL. You may have heard that before. In 94, the senior assessment freeze was enacted. And in 2007, 3 new homestead exemptions were enacted. The most recent exemption you may have heard of is the returning veteran exemption. And that's if you are serving in a theater of a war like Afghanistan or Iraq, and you come home, the first 2 years that you're home, you get a $5,000 reduction. So if you have sons or daughters or grandchildren or nieces or nephews or neighbors or friends at church that you know have served and are coming back, make sure that they know about this returning veteran exemption. Okay. So what determines my property tax amount, this is in the brochure also, is basically you have an assessed value. You subtract any exemptions that you're entitled to under the law. You multiply it by a tax rate, and that equals your tax bill. I'm going to turn this over now to Kelly Melcho, who is from your local assessing office here in Clark County, and we're going to switch over to her PowerPoint and let her talk about how the process works, and you can get local answers for the local issues. All right? Kelly, thank you so much. We appreciate it.
I have the great fortune of having a very loud mother, and she birthed a very loud daughter, so I don't need the microphone.
All right.
What he said is true. My name is Kelly. I'm from the Clark County Assessor's Office. I am but a mere clerk. As he said, our fearless leader had surgery today on her hand. She's very, very tired, but she's doing well. Just spin the short slide for you. Just a quick overview. The courthouse, your tax bills don't just come from the assessor's office. They don't just come from the state. They don't just come from the treasurer's office. The assessor's office just assigns the property valuations. They take the different items on your property, different buildings, the age and condition of them, and also the value of the land, where it's located, and figure at 33 1/3% the fair market value of what it would sell for. And then the county clerk's office assigns the tax rate based on the levy. We'll cover that in a minute. And then those numbers are sent to, our numbers are combined and sent to the Illinois Department of Revenue, which is where it goes to the state. and they apply a multiplier or equalization factor if needed. This year, unfortunately, there was a multiplier of about 3% that was set on all of the properties. And then the treasurer's office just collects the taxes. Slide, please. This is an example of a tax bill. I'm sure you're all aware. What we're primarily going to be focusing on is this side over here, which sort of gives a how it's calculated. It's a little tricky to understand because it's all smooshed, but we're going to cover that. Slide, please. There it is. No, it's okay. Slide, please. There we go. Slide. Okay, so I need a laser. I'm so short. Okay, so a fair cash value, as I said, is the fair market value, what the property would be worth if it were sold in a fair market. And what I mean by fair market is not sold between relatives, not sold at a tax sale, not something that is fair, something that has been well advertised for, something that has been well assessed, something between two impartial parties, which is your lot value plus your building value times 3. Slide, please. What is lot value? It is your lot assessment, which is 1/3 of the value of the actual land. So you're not taxed on the total value of the land. It's just at 1/3. Slide, please. And then the building value is the same thing, but it's for the buildings. Slide, please. Oh, and just quick, the lot value is just on residential lot or commercial lot, not on farm lot, not on farmland. That's a completely different beast. The assessed value, as I said, is 1/3 of the fair cash value. Slide, please. And then the state multiplier is the factor added to ensure fair taxation if necessary. So, for example, when we send in our abstract, our assessment saying, hey, this is what all of our assessments are for this year, send it to the county clerk's office, okay, here's our tax rate based on the levy. We send them to the state. They say, well, your numbers are really low based on the sales that are in the area. So we're going to have to apply a multiplier. This used to happen all the time, and it hasn't been happening as much lately because we've been trying to put the assessments at what they would actually sell for. Unfortunately, because Clark County is so small, we don't get a whole lot of sales. And those sales usually and a lot of the sales get thrown out because, again, they weren't sold in a fair market. They were sold to cousin Jim, who gets like a $10,000 discount because he's your mom's favorite. So it doesn't count as a fair sale. Slide, please. Equalized value, it's the assessed value after any equalization factor. Slide. And then exemptions, everyone's favorite, the things that kick down your bill. They reduce the taxable value of the property. Now the exemption value, which we'll again cover in a minute, goes on the actual assessed value, not straight to the taxes. So it does affect your taxes, but if you get, you know what, I'm getting ahead of myself. Cover that in a minute. Slide, please. And then the net taxable value, the amount of the value the tax rate is calculated on. Slide, please. And the tax rate, which is determined by the county, and the sum of all the taxing districts' tax rates. So by taxing districts, I'm not saying that Casey has to pay for Martinsville and Marshall and all the other townships. I'm talking about the districts. So each district is each thing that you're paying for the ambulance, for the fire district, for the police station, for the local business offices, for the roads. Each of those are a district, and each of those are broken down. So on the previous slide, which we're not going to go back to because that would take too much time, up at the top of the bill where it was all, there were different lines for each thing, those each show your tax rates so you can see how much each thing is getting, how much the library is getting, how much the fire district is getting, and so on. Slide, please. And then the total tax due, what everyone's eyes immediately go to. Slide, please. Okay, so the state equalization process, just keep going. Is, like I said, equalization among all the counties to make sure that the assessed values are at the same level of the sales that are involved, same level the abstracts are involved with. This is just a short thing saying that the department does have the right to do this. They're allowed to raise or lower whatever it is in the county. And the property will be assessed at 33 1/3% of its fair cash value, except Cook County, which is weird. So we're not going to focus on them. Slide, please. Okay, so the levy process, which is not in the assessor's office, remember, it's in the clerk's office. They adapt the budget for each taxing district. They send it out they send out a public notice, which is published in the newspapers, just for you guys. And then we take that for the levy, which is the portion tax embodied revenues raised through the property tax. Slide, please. And then the certification to the county clerk, which includes a certified budget copy and estimates of the revenues to sort of help calculate what all is going to go to where. It's just like budgeting your checkbook, trying to figure out what goes to the gas, what goes to electric, all that fun stuff. Same thing, just on a bigger scale. Slide, please. Our office's schedule is the township assessors that are in your little brochure saying who's in charge of what township, they are our data collectors. Each county uses them for different purposes. Some counties have them go out and actually assign values to them. Clark County doesn't do that. We find it's a little more efficient if as few number of people are giving their estimates on this as possible, so that way our numbers are as similar as they can be. So there are data collectors. They're Albert. You may have seen Albert walking around, or Wayne Hyden walking around, taking pictures of things. They're not creepy. They're very nice, and they and it is actually a rule that a person cannot be in any of our pictures. It just has to be structures. So we're not peeping on you. I promise we're not. So they take pictures of the different buildings, make sure that we're not assessing your pole garage at like a brand new thing when it's been there since 1922. And then once they bring us those updates, then we enter the data, and then the farmland assessments are calculated, and the farmland committee holds a public meeting letting all the farmers know, hey, this is what's going on. Just so that way everyone's informed. If you have anything that you need to say, if you have anything, we're there for feedback. We're there if you guys have any questions. Slide, please. And then we have our first deadline for the complaint forms, which some people ignore because it hasn't come before all the fun stuff yet, like tax bills. Slide, please. Okay, so these are the quadrennial townships. This is our system of assessing. Because it would be impossible for us to do the entire county in 1 year. It's just not possible. There's way too many properties for each township. So this shows each year just for this quadrennial set. As you can see for 2016, we're doing Dulce, Auburn, Martinsville, and Orange. And all that means is that since these townships were assessed in previous years and they're going to be assessed in next year's, those assessments won't be affected unless new buildings were added or removed. So these townships are the ones we're going through with a fine-tooth comb. We're checking to make sure, for example, farm buildings, if they're not in use, they're not assessed, because farm is based on use and on potential. Like I said, if it's a barn from 1920, and it hasn't been used for anything, we're not going to assess it. There's no reason to. For residential, let's be honest, if you have a barn on your residential property, you're using it for storage. And if not, then come and let us know. Say you don't use it, it's a terrible piece of junk, it's falling in on itself, tell us and we will reduce it down to like $5. But we don't know until our township assessors see it or until you guys let us know. Slide, please. Our schedule continued. Then we send out the assessment change notices, which is one of your first happy little gifts from us of the year. We let you know, hey, your assessment's going from here to here. And then we set the next deadline for the board of review complaint forms. Come in, tell us, would you sell your property for this? If not, explain why. Did you have an appraisal done? Well, what did they say how much it was worth? And then our board of review takes it, they analyze all the information, and then they get back to you with your decisions. If you don't agree with what they decided, That's okay. You can still file again. And then it goes through PTAB, Property Tax Appeal Board. And then you just go on to the state with that. Next, please. And then back to the county clerk, because it all comes full circle. Board of Review finalizes the assessments, and then the Illinois Department of Revenue certifies the final county equalization factor. So again, they decide if we need an equalizer or not. And then the taxing district levies are certified, they're set in stone, ready to go, and then the appropriate percentages are calculating for each taxing district. Slide. The tax rate is levy over the tax base. So that's sort of the simplified way of, that's sort of the simplified formula of how they calculate it. Slide, please. Tax base is the taxing body's equalized assessed value. So you know how before when we were looking at the tax bill, how you had your assessed value and then your equalization factor and then the net. Well, your assessed value is your tax base, and the levy is their decision. Slide, please. Okay, so this is an awesome website. I encourage everybody to look at this website. I didn't put our mapping website on there, primarily because the address is way too long. If you're interested in looking at our mapping website, please check out our website, our official county website, and it will be on there. GIS maps is right underneath the picture of the guy checking his phone. But if you go to clarkil.devnetwedge.com, you can look up your property and you can look up what your assessed value is. You can look at the information we have on there. You can look at the legal description. Like if you have a house and 2 garages. Well, you tore down that garage 2 years ago. Why is it still there? You give us a call and we'll check. Oh, it is gone. Sorry about that. We'll get that taken care of. It will be off and no one worries. You can also check when you go onto the website, I should have taken a screen cap of this, but when you go to the website, on the right-hand side of the screen, there will be different tabs that you can choose from. Exemptions, names, addresses, taxation is what you want to check out because it has this really sweet graph, pie graph that shows you what taxing districts you are in and what your tax code is and how much % of each tax bill is going to that. So you can see how much of the pie is being taken by the library, by the schools, all that stuff, so you know what you're paying for. Slide, please. Okay, so this looks ridiculous, but it's very important. So it's kind of hard to tell, but the green line is the 2014 tax rate and the blue line is the 2015 rate. The reason I put them so close together is to show how much of a minimalistic difference they make. This is just between 0.5. That's all those notches are a difference between. So as you can see, this is a lot of numbers, it's really hard to read, but each of them are tax codes. In each tax code, there's a bunch of different tax districts. So on some of the taxing codes, it went down a little bit, and on others, it went up. This looks like a lot. Let me remind you, this is only 0.5. So it only went up about 0.5 for some of these, and it only went down about 0.2 for others. But for a majority of them, as you can see, it's pretty stinking close. So when you look at your tax rate, if you compare your last year's tax bill with this year's tax bill, and the tax rate, like it says 8.51123, you're like, well, last year it was 8.5067. It's very, very minimal, but it still adjusts the budget based on the numbers that we receive from the state that the county clerk then calculates out. So that's how that's adjusted. Slide, please. Services the tax rate fund. What you're paying for. Your area library, local government offices like the courthouse, yes. Let's just get that out of the way right now. Yes, you are helping me pay for my student loans. But it also pays for the ambulance, the firefighters, police services, any of the parks that are located, any of the extra little service things that are going on, the road maintenance. Wabash, I'm sorry, has horrible, horrible roads. And that's why Wabash got hit a little harder this year. It's because Wabash not only has really terrible roads, but there was an issue when they were calculating their budget for the past like 3 to 5 years where somebody missed a decimal and they haven't been taking out as much as they should have. So poor Wabash got hit a little harder than everybody else. And now I feel sad for Wabash. I really am upset. I'm not being sarcastic, I promise. District schools, district community colleges like Lakeland, Lincoln Trail, stormwater management. We got a lot of rain last couple of weeks. We dealt with that. Tourism attraction, those big giant wind chimes and that big giant rocking chair have to be built somehow. Traffic and street lights and sidewalks, the things that help you safe. Slide, please. Homestead exemptions, the fun thing everybody likes. These are the most common exemptions that we have. Mark mentioned the returning veterans homestead exemption. It sounds really awesome, and it really, really is, but honestly, I've only been at the assessor's office for on and off for about the past 4 years. We have not had one person apply for it yet, just because it hasn't applied yet. The most that we've had people apply for is an homestead exemption, persons with disabilities, vet disabilities, assessments, senior citizens assessment freeze, and the general homestead exemption and the homestead improvement exemption. Homestead improvement exemption, we get a handful every year, and the general homestead exemption, I'll cover that in a second, but you just get it if you live there and you own the house. That's it. Effort well done. Slide, please. Oh, yeah, in order to qualify for any of these, the owner of the property must claim that property as their principal residence, or they have to have a leasehold interest, like a life estate or something like that, and be responsible for the taxes as of January 1st of that year. I cannot stress how important that is. We've had people come into the office and say, why am I not getting the homestead exemption on this property? Well, because your property is a vacant lot and there's no building for you to live in. That is why you are not receiving that exemption, because it doesn't make any sense. If you were sleeping in a sleeping bag on that lot, maybe we'll look into it. But it's very, very unlikely. You have to claim it as your principal residence and you have to own it. We've also had people come in and file complaints for the taxes that are their neighbor's taxes. You have to own the property in order to complain about the taxes. Slide, please. Common homestead exemptions. This is just a short thing of what each one provides and what each one, how you're eligible for each one. Homestead exemption, we call that the owner occupied exemption, because if you call and you say, hey, I'd like to apply for the homestead exemption. Okay, great. Which one? Because all of these are homestead exemptions. But you can say the homestead exemption, and we'll just assume that you're calling for that, or we'll ask you more questions about it. We're very quizzical. But that gives you just for living there and owning it, $6,000 reduction on your assessment. Remember, I said assessment, not taxes. Your assessment is reflected in your taxes, but if your taxes amount to $157 a year, you think, oh, well, I live there, so $6,000 off. Nope, that's not how it works. Not quite, because remember, it's a third of what it's worth. Senior citizen homestead exemption, all you have to do is be 65 or older. Done. The fact that you have reached that age, we are very, very happy. That's awesome, and you should be very, very happy too. So happy 65th birthday, you get $5,000 reduction. Senior citizen freeze homestead exemption, it freezes the assessment on the property. Again, not the taxes. I know it sounds like a broken record, but you'd be surprised how many angry people I get calling. I just want to emphasize this. Freezes the assessment on the property to that of the prior year applied, which is the base year. The taxes are still affected by the fluctuation of the tax rate. So for example, this year we received that wonderful little 3% multiplier. Even if you have the assessment freeze, your assessment is frozen, but there's still an equalizer that can be put on that. So your taxes will still be affected. Not as much, because your assessment still isn't changing, but it will still be affected. And if you have a total household income of $55,000 or less for the prior year. For all of these, and for the next slide, We have paperwork for you to fill out. It's honestly mowed pretty easily. We can fill out most of it for you. Single home, if you have any other properties, and this is your principal residence, it's pretty straight to the point. And for your income, if that's kind of hard and frustrating for you to figure, that's completely okay. Numbers are obnoxious. Just take it to the person who does your taxes, or take the stuff, or take your taxes, like your little income tax forms, to us, and we will help you. We'll help you fill all the forms out. We like people, and we'd like to help you as much as we can. The disabled person's homestead exemption, $2,000 from the assessed value. Disabled person, that is not to say if you broke your leg walking out of your garage the other day, oh, I'm disabled this year, I get the exemption. No, 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 no. You have to be, your physical or mental impairment must last for a continuous period of no less than 12 months. That's not from us, that's a statute thing. But enough so that you would get a disability award letter, which you would bring into us, or a disability class 5, I believe, or class 2 disability identification card. Bring one of those into us and we'll help you fill it out, no big deal. Disabled veterans homestead exemption. Statewide, $70,000 depending on the effective disability percentage, which I think that actually got kicked up, didn't it? Or is it at that 70,000? No, 70,000 is the kicked up amount. Okay, so it depends on if you're 50% disabled, 100% disabled, then that applies that. And that can be if you're a veteran or if a veteran's spouse is disabled. That's not right?
That's the difference. That's 2 different exemptions.
Okay.
The disabled, or the veterans exemption has been around for years. That's 70,000, up to 70,000 for the house. The other is the disabled veteran exemption, which is 30 to 50% disability, $2,500 off the assessed value. 50 to 70 is 5,000 off the assessed value, and anything over 70% disability is 100%.
Okay, thank you, Mark. Sorry, not a random audience member. That's Mark Becker. He's a supervisor of assessments. He's helping me out today because I'm very nervous. And then the homestead improvement exemption, the statewide maximum of $25,000 deducted from the assessment. It applies for 4 years from the date that the improvements are completed and that the improvement is completed and occupied. So if you added a new addition to your house, that's an addition of square footage. It applies. Come in, let us know, and it applies for 4 years and gradually increases in those 4 years. Slide, please. Yep, that. Headed to the square footage. Slide, please. And discussion, and that's it. So if you have any questions, feel free to ask them. If you can't think of them tonight, or we don't have enough time because I'm a big giant rambler, feel free to call us at the assessor's office. We'd be more than happy to talk to you about it. Okay, thank you very much. That's it. Does anyone have any questions, or are you just gonna like come up here and rescue me?
Just getting ready to ask if anybody
okay.
had any questions for either Kelly or Mark. And okay, well, if not,
The equalizer puzzles me. How is it determined to be 3%? As opposed to maybe it should have been 4 or 2. That comes from the state. What is there? Is a formula someplace?
Very fair question. Okay, so when we have to catalog all of the sales for that year and for the prior year, and we catalog them by township, by square footage, by what all was square footage, by acreage, by what all was sold, and how much it was sold for. We send that to the state and we say, hey, here are our sales. Say, okay, there really should have been more sold than that given the market that you had, or your assessed values should be reflected in these sale prices. So for the longest time, the assessments weren't being moved. They were just left alone, and the state would just apply an equalizer every year, or a 3% multiplier every year to help keep us up. So the more accurately we apply the assessments, the less the state gets involved, ideally. That is how it works on paper. So hopefully that is what it continues to work on. It's getting a little fuzzier because we just added oil this year, which should have taken care of us, but for some reason it didn't. Just something that is really good to talk to Reggie Phillips about, because Clark County just adapted the new oil assessment schedule from the rest of the state, which Mark Becker knows all about because he helped teach me. But yeah, before oil was not assessed correctly, and it was not assessed at enough. It's based on on a lot of different factors, but one factor mainly being the price of oil. And since the price of oil for last year was very good, and for the year before was very good, assessments went up. So why we got a multiplier this year, I'm not 100% sure. The only thing I can think of is that maybe it won't apply next year because the numbers were behind. That's a state thing, and that would be a great question for Reggie Phillips. But on our part, it's just on the sales. That's what we sent them. Great question. Yes.
What makes a township assessor qualified to assess?
Another wonderful question. So traditionally, like I said, we have most counties have them go out and put the actual values on the properties. This is also very helpful if our office is swarmed. So the township assessors have to go through different classes and get their CCAO. What's CCAO stand for again?
CIAO.
CIAO, thank you. That's
Certified
makes a
Illinois
lot of
Assessing.
sense. They're certified Illinois assessing certification. So it's just a few classes that you have to take. If you take them all right in a row, you can finish them probably in about 1.5 years or so. That's not because of how long the classes are, it's just because of how they're spread out. So if you take those classes, then the more townships you assess them, the more you get paid for them. Which is why in your little pamphlet, Wayne Heighton has like several townships. But yeah, if you're just a regular data collector like Albert, as opposed to Wayne, Wayne has his certificate. So he can put values on houses and stuff. Albert does not have his certificate. He is our official, unofficial data collector. He just goes out and takes pictures when Wayne doesn't have time. So if you want to just take pictures and get paid for it, talk to your township assessor. Ask them if they have any openings. I'm sure they'd love to have you. But as for the actual township assessor, you got to take the classes for that one. Just like the supervisor assessments. Yes. Oh. Your hand was up first. Ladies first.
Questions.
Yes.
So I'll ask them one at a time.
Okay.
I had a lot of errors on my tax. One of my tax statements was the half of the Southwest.
Okay.
I don't know if I own all of Clark County, or just half of the Southwest.
That's
That's just one of them. I
Gotcha.
mean, since it's just 4 little monikers, I could easily remember that.
gotcha.
I understand got a new program. Did no one check anything?
What do you mean by it? Oh,
I mean, that's just one of the errors. I mean, I'll bet you 50% of mine didn't actually. Now, and I wasn't the only one, because I went into the courthouse to pay.
Mhm.
And while I'm there, then the person to my left, not gonna disclose name,
Of course.
but anyway, he came upstairs. I didn't have the time or luxury to do so. But he comes back in and says, hey, if you go to the 3rd set of numbers, then that's your section number.
Yep.
But I was trying to match it up. But, you know, I didn't really think I need to go to class to get this.
Right.
And I'm kind of saying, why were that many errors on this?
What do you mean by heirs?
No
Or
description.
by,
I just said, my description on one of my tax statements, one of them, south half of Southwest.
okay,
Does
that's,
that tell you where it's at?
yes, it does actually. Could you go to the slide that has the picture of the county map on there, the quadrennial map for me? The visual person, I need it. Oh, aha, okay, so that is the legal description. It's sort of a shortened version of the location of where it's at. That does help us. So in each township, there are different sections. So like, let's say section 32 is here. So there would be just like a little box here if I had a pen. And then,
Well, and I understand sections and townships, see, I'm
Okay.
very lucid.
Yeah.
But I'm just saying. So that, you tell me where that is on that map, which township it's in, because I know what township.
you know what
South,
township?
Southwest.
South half to southwest. That would be, that's not as particular. I'd have to know what the township and range
That's what
would
I'm
be.
saying to you. That's my legal description is south, half, southwest. And that's just one of them.
That's because on the legal description, on the bill, it doesn't have the section, township, and range. In the program that we put that in with, it has a separate box for each thing. So a box for section, box for township, box for range, and then a box for the specific legal description. Like the the southwest quarter. So like if you were in section 32 of township
11 there,
11.
north, yeah, and west, I
Yeah.
understand.
then that would tell us, okay, you're in section 32 of Marshall.
I understand
And
that,
then
but I'm telling you, that's what it gave me for legal description, is
Okay.
that's the best it's gonna offer.
if you would like us to put the section, township, and range in there, we can put it in there. We can see it on our side though. So if that's something that you need to see, then we
Well,
can put that
there
in
were
there. It's
two
not a
of
problem.
us in there at one time, he had
Okay.
a problem and I had a problem.
Right.
That's 100% where I roll.
Okay,
Okay. So, yeah, we're accustomed to that, and typically when you're accustomed, you like to see it stay at that level.
okay,
There used
that's
to be limits on how much the taxes could rise in a year. Is there no longer a limit? Farm ground in particular.
okay,
It used to be
so,
based on income. If I understood right, you're telling me that each of these are only gonna be evaluated every 4 years with a fine tooth comb, correct?
that's not evaluated, but seeped through, if that makes any sense. So looked at, okay, so the rest of the townships are valued. They do have values on them, but they remain the same as the previous years for 4 years because we can only do so much, honestly. So those four, so these four, we have 4 girls in our office right now. I'm in charge of Martinsville right now, and I'm almost done. So because I am the one person who's doing Martinsville, I can go through it. I can look at all the pictures. I can spend all my time making sure that everything is evaluated the way it's supposed to be. Now, you're saying, now if I'm getting right, you're asking if there is a tax cap based on your income? No,
Not my income.
no, there is not.
Not income, no.
Okay,
Farm income, meaning how much is being made per acre, the
The
price of
productivity?
grain. They both, yes, your productivity.
Yeah. so as I sort of mentioned before, farmland is a completely different beast than residential lots are.
Right.
Residential lots are valued differently in the sense of location and how much you would pay for it if you were to live there. So if you live out in the boonies, it's not going to be as much because it's more convenient to live in town. So in-town properties are going to cost a little more. Farmland is assessed differently in the sense it's based on soil and soil type and productivity and essentially what the potential is of the ground.
Right, and is there a cap on how much that can rise in a year?
Yes.
And what's
Yes.
that cap?
Honestly, I don't know because,
Of median income. The soil type, it just changed this year, the law just changed this year. Originally,
So it wouldn't be, was that an effect for our last year's taxes?
yes, totally different than last year. Last year, you had 10% of that particular soil type. That was the most it could go. So if your soil type was only going to go up, was at $150 an acre, then the most it would raise in 1 year is $15. Now, they have went, the legislature changed 2 years ago. And, it was passed 2 years ago, it went into effect for 2015. It is 10% of the median productivity index, which is 111. So, with that value for 111, which this year, I think it was $181, it could go up $18 instead of the $15 before. So if you have a soil type that is a very low PI, such as
Like woodland?
hickory, hickory, they would be in assessed probably before around $30 an acre before crop cutting. So it could only go up $3 or $3 to $5. But because of this change in the farmland law, it went up $18 this year. And that's why you see such a big increase. Farm Bureau's been having meetings all over the state also over this. And I'm surprised that it's this county. But,
They had a meeting in this county, just nobody showed up.
okay,
Because we don't know about half of this stuff.
Well, we sent out, for the Farm Bureau meeting, we actually sent out postcards everywhere and put something in the paper and no one showed up.
And sometimes it can be in a conflict evening.
Right, of course,
And see,
I completely
obviously, I
understand.
also sit with all my ground involved out.
I
So I
completely
got
understand.
doubly here.
yeah.
But you should know
And that's-
though, that the
people
Farm
live
Bureau
there.
did fight for you though.
And
We're
what
going
is
to increase it
happening-
more and they did. They
What
wouldn't
is
let them.
happening is they are, because of the price difference between northern Illinois soils and southern Illinois soils, they are trying to get it, right now it's a 40-to-1 difference. When this was originally conceived, it would be a 2-to-1 difference between southern Illinois soils and northern Illinois soils, as far as the assessments go. So they are working to bring that gap to be a smaller percentage. And over the next 20 years, they say, which the Farm Bureau says, then they're going to get it where it is approximately a 2-to-1 difference. Up from southern Illinois, we're seeing the big changes too. In northern Illinois, they're seeing their ground actually decrease or increase less than it would have if they hadn't changed it. So,
I'm hearing though that they're gonna start assessing the farm ground higher and higher in the next 10 years.
yes, it's all based on whether it's, the PI is at 111. Now, if you were to have 3 to 5 bad years, and by 3 to 5, because farmland is assessed, is valued based on the 5 years productivity and expenses, and then 411. But if you were to have 3 to 5, you might actually see farmland go down a year or two. We have, since I've been in office 27 years, I've seen farmland actually go down probably 5 or 6 times at least. Back in the 90s, if you remember when yields, when the prices were bad, farmland was decreasing.
That's what it is.
Yes. Yeah, so,
And high rates.
Yeah.
And that brings me to my third and final. Do we do anything for CRP and EWPs?
Yes, yes, there are programs for those. For WTP, CRP, EWP. I know I'm missing a couple, but yes, we do have forestry programs for those. I believe most of those can be applied through the Department of Natural Resources. If you,
For your taxes is what I'm talking about.
yes, if you're in those programs, those have completely different formulas. They're assessed in a completely different way. They're assessed in a much greatly reduced rate.
But they don't freeze them, even though your EWP
No.
is done and your income is over.
Technically, in a way, it's frozen, but so, for example, the percentages, the formulaic percentages are the same. So unless, I believe for EWP, you multiply it by 10% and then take that at a third. I'd have to look at my little sheet in order to tell you for sure. If you call me tomorrow, I can tell you for sure. But until that number changes and until your acreage changes, that assessment's staying the same. Unless you're in,
Acreage won't change.
exactly. So if the acreage doesn't change, the acreage is one of the main input numbers into that formula. So unless that acreage changes, or unless that percent changes, the assessment stays the same. and you don't have anything to worry about.
No, it doesn't.
No, it doesn't.
It depends on what program you're in.
I said EWP.
I'd have to look at the formula for it and see what percentage it's used to calculate.
And that hasn't been used a great deal lately.
How do you mean it hasn't been used a great deal lately?
It's called Emergency Wetland Program. It's more of an
Right.
FTE.
Right.
Right, Jonathan?
I have the right funding to get that. It's just,
It's
have the
fun.
same thing, it's just a different funding source, what's called WRP, WRE now. so.
Right.
But most of it's been put in, will be put in, so. for
Yeah,
Minimal amount.
and that's what I'm saying. Obviously, I have some. And obviously, my taxes have gone up, as maybe Sharon said. And I mean, and once again, it's in Wabash Township. And, but if it's not supposed to be going up, it's going up a lot. And that's what I'm saying. Why is that happening if it's not supposed to happen? What if I misfiled or whatever?
I would honestly, please call our office tomorrow, our number's on the brochure, and let me look at your individual property and see what all's on there. And I can tell you for sure what's going on with it. But if you call us, 217-826-5815, you call us and you ask about your program, about your property, we'll look up your property, we'll look at the specific numbers that were used, look at the formula, make sure everything came out right. But like I said, I don't have these formulas memorized. I'm not that good. So I'd have to look at the specific property and see what happened. But please do call us and we will sort it out, I promise. Because farm wouldn't be hit by the multiplier, would it? No. So they should have stayed relatively the same, but let me check at it and I will get back. And you call me and I will get to you, okay? All right,
you guys.
thank you very much for your questions.
Thank you guys for your questions, Kelly. Thank you
I
so
got
much.
one.
Can you catch me after?
Nope. I'm gonna catch you right now. I wanna know why our taxes are based on fair cash value and not what we pay for the property.
Okay,
Because there's like a $40,000 difference from what I paid for it and what I'm taxed for it. And the first question your office asked, and the first question the Board of Review asked, wouldn't you sell it for that? It's not for sale. That's not the point.
because
And it's just really aggravating. And I know for a fact that the sales and the prices are down on these properties, because I've talked to the realtors. But you guys keep raising those house prices and asking us to pay more and more taxes on them.
if any buildings were added to the property,
No buildings.
okay. Whatever you originally paid for it, and if you didn't add any buildings or anything, it won't go really more. it
Paid
won't go
80,000
higher.
and you're charging me for 122,000
In what year did you buy it though?
last year.
Last year? Did you buy it at a fair market?
Yeah.
Did you buy it not from a family member or anything at a fair market? Then,
The bank had it assessed at 100,000 and you're still charging me $122,000 fair market value.
let me have a look at it.
It doesn't do any good. You guys have looked at it and looked at it, and all of your questions is, first question out of all your mouths is, wouldn't you sell it for that?
Because that's how the system works.
One thing
Well,
that
the
you might,
system sucks.
I had that same issue in Charleston on a piece of property I bought. Thank you very much, Kelly. Yeah, and appreciate her being here. I'm gonna go ahead and jump in because I had that same thing happen to me on a piece of property I bought in Charleston. I went to the taxing body, just like you said, the three gentlemen that were there. I